财经热点深度解读，大家好，欢迎收看本期的全球财经连线。伴随着美国8月 CPI 和 PPI 数据新鲜出炉，投资者对美国通胀的讨论再度升温。与此同时，投资者静待美联储9月议息会议的成果。面对居高不下的通胀和复苏疲软的就业市场，美联储将何去何从？一旦美联储收紧货币政策，美股在第4季度是否会出现回调？投资者应如何配置自己的仓位？我们现在就来连线嘉盛集团全球研究主管 Matt Wheeler， 一起听听他的观点。Hello, Matt. Thanks for joining us.
Yes, thank you. Thanks for having me. Looking forward to it.
Let's begin with the U.S. economic data. The August PPI and CPI data have been released. What can we learn?
Well, it's very interesting because we just had the release of the August CPI report, which came in softer than expected with less price pressures than many economists were expecting. And that's actually the first inflation report that we've seen come in lower than expected since October of last year. Mm-hmm. So it really provides validation for the inflation is transitory camp that Fed Chairman Jerome Powell and the rest of the Fed has sort of adopted. So that suggests that perhaps inflationary pressures may have peaked and may be falling. That said, the PPI report is still showing relatively large price pressures, which may compress margins at large companies, but I would expect those to come down as well soon.
Mm-hmm. Do you think the inflation rate will keep rising in the next several months?
Well, generally, prices of things go up. So I do think we'll see positive inflation, but I do not think the rate of growth on a month-by-month basis will continue at this pace. For example, we saw in the just released CPI report that used car prices fell, and many will recall that used car prices were one of the big factors driving the rise in prices throughout the middle of this year. And I think that goes to show how the system has adapted, how some of those supply chain concerns are being at least partially alleviated. And I think we may be past the worst of inflationary pressures in the US.
Do you think the supply chain issue is the main factor for the inflation rate?
Yes, I do. I
Why?
think because the whole situation with COVID, of course, shut down production everywhere, and especially with regard to semiconductors and the global supply chain, how closely linked that situation is. It's taken a long time to get up to speed, but at the end of the day, capitalism, if it continues to work, will find new ways of generating some of those materials. We'll have more resilient supply chains, and we'll be better prepared for the next crisis, which hopefully is a long ways off.
Mm-hmm. What factors will drive the inflation rate in the fourth quarter?
Again, I think we're likely to see some of those price pressures come down as, again, manufacturing supply chains get back to normal. And one to watch will certainly be the buildup of savings, especially in the US. A lot of consumers have been unable to spend money on things like trips or concerts and events due to the COVID pandemic. And if that does start to ease, there's a lot of pent-up demand that could drive inflation in a different way. But again, I would expect that to be relatively short-lived as everyone gets all that pent-up demand out of their system and then returns to a more normal lifestyle.
Looking at all those data, the US economy trend seems to be divergent. The inflation rate is high, but the labor market is still weak. How do you think about the current US economy?
I would push back a little bit. I don't think the labor market data has been particularly poor. We had 2 months in a row of nearly 1 million jobs created, which is relatively high. That said, the most recent NFP report did come in soft, so I think policymakers will be keeping a very close eye on that. But from my perspective, I think it's almost a perfect situation for the Federal Reserve to continue to leave quantitative easing in place for the moment because we see inflation starting to soften. Well, the labor market is also softening, and that creates a lot less pressure on the Fed to taper asset purchases or eventually raise interest rates. And I think that's a theme that we're going to see really play out throughout the rest of this year.
But the August job report is far away from the expectations. What's the reason for that?
A lot of it was in hospitality. So restaurants, bars, hotels, travel, those were the areas that actually saw more job losses and were the greatest disappointment, whereas things like manufacturing tended to see strong growth in employment. So to me, that suggests that U.S. consumers are a bit cautious around the resurgence of COVID-19 and specifically the Delta variant. And that'll be a key theme to watch as well. If cases continue to get worse as we head into the winter, more people are inside, and that virus continues to spread, that could be a factor to watch when it comes to the labor market and inflation moving through the rest of the year.
Would you like to give an outlook of the U.S. economy in the fourth quarter?
So we don't make exact economic projections, but certainly I think with this tailwind of monetary and fiscal policy trying to stimulate the economy, I think that's something that's going to keep the U.S. economy growing at a healthy pace. Again, the wild card there is with the pandemic, but as long as that remains relatively under control, we're fairly optimistic about the prospects for the U.S. economy in the short term.
Do you think how the recent economic data will influence the Fed's decision at the next meeting?
I wouldn't expect much of any change. I think after Jerome Powell's Jackson Hole speech last month, he pretty clearly laid out that the Fed needs to see sustained, continued improvement in the labor market. And the recent data suggested that is not yet the case. So I would think that the Fed will likely remain on hold, make no new announcements. They will issue new economic projections, which I think will be worth watching for the market and seeing how the Fed evaluates the economy moving forward. But I think in all likelihood, next week's FOMC meeting won't be a big market mover, and traders are really more focused on the meetings upcoming in November and December when that central bank may actually announce its tapering plans.
You mentioned that the Fed will begin to announce taper in November. So what can we expect from the September meeting?
From the September meeting, I think it's just going to be setting the scene. So providing an update to the market and consumers about how they view the economy, likely as we've talked about, probably something where they say it's improving, but we'd like to see more improvement in the labor market with inflation potentially having peaked. That reduces some of the pressure on the Fed. So I think it'll be a cautiously optimistic outlook on the economy and something that's probably not too likely to lead to a big move in the markets.
The Fed's officials showed different views on tapering. Do you think when the Fed will begin to taper?
So there's certainly, it really depends on the makeup of the voters on the Fed. There's a rotating group of voters, and there's some people who are always voters. It seems like the core of the Fed, led by Jerome Powell, is comfortable pushing taper back, at least until the fourth quarter of this year. And then do note that we will get a new group of voters coming in 2022. Some of the rotating voters have been a little bit more optimistic about the U.S. economy, or at least a little bit more concerned about the risks of continued quantitative easing. So I think as we move into the new year, that might change the texture, and that could have a big impact on the pace and the timing of quantitative easing. But as it stands, I think we're in a wait and see mode until at least November or December.
I think tapering is the first step of the Fed's policy. Do you think when the Fed will begin to raise rate?
After tapering's done, for sure. It's a very fluid situation. I do not expect it really in the next year. Maybe at the absolute earliest, if the U.S. economy performs well and markets respond well to tapering, we could see something maybe in the fourth quarter of 2022. But I think closer to the first half of 2023 as it stands is when we're most likely to see the Federal Reserve raise interest rates. But of course, that's very fluid. So we'll keep an eye on the economic data, keep an eye on the COVID numbers. And as long as those proceed, perhaps we'll be looking this time next year toward being a little bit closer to interest rate rises.
How will the taper and the rate hike affect the U.S. market?
Honestly, I don't think it will have too big of an impact. The only reason the Fed would be tapering or raising interest rates is because the U.S. economy is performing well or even overheating, if you will. It's performing above its long run trend. So in that scenario, certainly low interest rates and quantitative easing has been beneficial to the stock market, but the only way those get removed is if business conditions are very strong, which is also good for the US stock market. So perhaps there's some short-term volatility, maybe a brief correction as taper gets announced or as interest rate hikes become more likely, but the longer-term trend remains higher. And I think the fundamental conditions that would bring about an end to this supportive policy are things that would otherwise support stocks. So I would not expect a big negative impact personally.
In September, the US stock market's performance is not very good. Why?
Well, I mean, as I'm speaking to you, we're 2 weeks into September and the stock market's down 1.4%. So after rising 6 of the last 7 months. So we generally don't put too much in just 1 or 2 weeks worth of price action. That being said, we are seeing a little bit of sector rotation underneath the surface. The big tech stocks that have been so strong of late have taken a bit of a breather. They're actually trading down slightly so far this month, but we have seen a lot of strength in the energy and consumer sectors. And I think that just goes to show how throughout this bull market, the stock market has continued to rotate leadership. Initially, through the middle of 2020, it was the tech stocks leading the way. Then as traders started looking ahead to reopening, that's where some of the consumer names and the brick and mortar companies led the way. We recently flicked back to tech leading the market, and now it's energy. So I think this is a healthy sector rotation, and certainly we're not too concerned yet about the stock market falling a little bit over 1% over 2 weeks.
What caused the sell-off in the tech sector?
Again, I wouldn't characterize it as a sell-off. I think tech stocks are down less than 1% so far, but I think it's just traders rotating around to where they see the best opportunities. So when they're optimistic about reopening and all that consumer surplus going back into physical retailers and experiences like we were talking about earlier, that's where those tech names become a little bit less compelling. But perhaps we could see another surge in COVID cases. And in those scenarios, that's where those tech-enabled names that support so much of the digital commerce that we've seen over the last couple of years, that's when those names tend to outperform. So I think it's just the market evaluating the prospects for the economy moving forward. Sometimes that favors tech, sometimes it favors other markets. But at the end of the day, we've seen continued strength in the stock market. And I think that's something that is likely to continue.
Mm-hmm. Looking forward to the fourth quarter, how will the stock market perform?
We'll see. Like I mentioned earlier, I think there's risks from the Fed potentially tapering that could lead to a short-term pullback. But frankly, we've seen, for example, the major US indices haven't even seen a 5% pullback in 11 months since last October. So it's been a very strong uptrend. Traders have been conditioned to buy the dip anytime we see a short-term pullback. And I think that's going to be likely the market's first plan if we do see any pullback related to tapering, and that generally keeps the bullish trend intact. And I think we could see continued strength in the stock market heading into the end of the year.
Will Santa Rally take place again in December?
Yeah, sorry, the Santa Rally. Generally, historically, that's been a pretty strong seasonal trend. It will obviously depend on what's happening with the broader economy, with monetary and fiscal policy, and of course, as always, with the pandemic. But if you just look at the historical trend, I think more often than not, we see that rally. I see the US economy is growing strongly. So I think it's more likely than not that we'll see another Santa rally into the end of the year.
What sectors will have more opportunities?
What sectors? So again, it depends on how the economy is evolving. I'm naturally an optimistic person, so I think we're likely to have a better handle on the pandemic than we've had at the start of last year, for example, and that tends to benefit some of those brick and mortar retailers, some of the back to normal type of names, and that's where I think those could outperform the tech stocks as long as there are no additional economic restrictions. So I'd be looking at things like consumer discretionaries, energy names, which have already started to outperform so far this month. Those are going to be some of the sectors that I'd be watching as potential areas of strength as we move forward.
Do you have any recommendations on the specific stocks?
No, I don't have any specific individual equities in focus. We tend to take a top-down perspective. So if you look at some of those broader perspectives, if that's something you agree with, you could look at some of the leaders or stocks showing outperformance in those sectors that are benefiting from the macroeconomic trends. And those tend to be some of the stronger bets that traders can make to try to jump on that trend and benefit from those. But I don't have any off the top of my head.
Would you like to give some suggestions for the investors?
Sure. So right now we're in a very highly uncertain environment, as I think has come out throughout this conversation. I think traders should be very attuned to what's happening in a couple of different areas. And we've mentioned them already, but policy. We have monetary policy potentially tightening in the coming months if the Fed looks to taper, eventually looks to raise interest rates. But we still have very expansionary fiscal policy with a new tax plan, new infrastructure working its way through Congress. So I think that could pick up the baton and continue to support the markets. The other thing to watch, as always, will be the path of the pandemic. If we see, more infections, things that lead to economic restrictions, that'll be a key one to watch. So my general advice would be keep an eye on the economy, keep an eye on policy, and certainly watch the latest developments with the pandemic, because that's what's going to drive stock market performance and really all market performance as we move through the next couple of months.
You mentioned the fiscal policy. Do you think when the fiscal policy will be released?
It seems likely this year. There's actually a situation as we're speaking now where the debt ceiling is coming into play. And that is something that Congress may likely have to deal with in the coming weeks. But in the past, that's always been resolved. It's kind of an archaic, no longer relevant situation. But nonetheless, Congress tends to jump through hoops after some grandstanding. So once that is in all likelihood behind us, I would think that's where Congress will turn their focus to additional fiscal stimulus, and especially on the infrastructure front. And I would expect that as of speaking, I'm not a policy analyst, but somewhere starting in maybe the November to December timeframe, certainly within the fourth quarter is when that looks likely to be approved and certainly could have a big impact on markets.
In particular, what industries will benefit from the fiscal policy?
The low-hanging fruit here is, of course, industrials, companies that are building things and that might be receiving either direct stimulus from the government to engage in construction and repairs, or that could be downstream from that, where certain industries get government funds and then they have to hire that out. So the very obvious example from a sector perspective, once that gets approved, is industrials, manufacturers, some companies in those fields. That being said, this is not super deep analysis, so there is a chance that the market has already priced that in. We'll have to keep an eye on the price action, and if we start to see those names breaking out, if we see that sector performing well, that's a sign that the market wasn't necessarily fully pricing that in, and that we could have further to run in the industrial sector.
Mm-hmm. Finally, I want to go to the Jeremy Powell. Do you think Powell will have the second term?
I do. That seems to be the way the momentum has been swinging lately. A couple of very prominent Democrat policymakers have come out in favor of Jerome Powell. Some of his comments about green energy and protecting the environment, as well as trying to support individuals at the lower end of the income scale or minorities. Those types of policies are things that Fed chairmen have not done historically, but they certainly resonate with the Democratic Party, which is in power right now. So I think at this point, what's most likely is that President Biden, probably in the next couple of weeks, will endorse Jerome Powell for another term at the head of the Fed.
During his first term, did he do a good job on keeping the Fed independent?
That's a very opinionated question. I certainly am not hyper-focused on Fed policy and its independence, but I think on balance, Jerome Powell did relatively well. We had an unprecedented scenario where the entire global economy essentially shut down all at once. We have never experienced that before. And from my perspective, Powell reacted very aggressively and very early to try to inject money into the economy. And as a result, the ensuing recession in the US lasted only 2 months. And now there's still concerns with COVID. Things aren't quite fully back to normal, but it's certainly much better than the alternative that a more conservative policy may have brought about. So from my perspective, I think he's risen to the challenge, and we'll see whether he can continue to thread the needle as we move through a new environment now with concerns about inflation, with this unprecedented stimulus still in place. There's always another challenge, but so far I think Powell's been up to the job.
All right. Thanks so much, Matt.
My pleasure. Thank you.
See you next time. 目前看来，随着疫情形势日益好转，美国经济有望在第4季度继续复苏。不过，对于美股而言，面对美国政府潜在的增税计划，或将面临回调的风险。以上就是本期节目的全部内容，感谢收看，我们下期再见。